previous high around here, so you can go ahead and maybe place it around about there. Get your sort of crosshair tool out so you can kind of work out where those two kind of intersect, and we could probably put it there at sort of at 145.902. Okay, so we can go ahead and put our take profit in there. Our buy entry will be in there, and we go in on the very new bar, on this long blue bar right here, and our stop loss value will be down here. Now let's take a look at the reward to risk ratio on that. Our stop loss value is approximately 39.5 pips, and our take profit target is 57.1. So let's just a little bit over 1-to-1 ratio. Okay, now if you don't necessarily need to have a take profit target in there, alright, suck as much out of the market as you possibly can. Okay, now when you go ahead and take a look at these two upper bands where you can project where you want to actually put your price action, you know, for take profit, when it gets to that level, don't immediately close the trade out. What I would do is move my stop loss and bring it to break even, and or bring it up to the first area of that band, of the inside of that band, that red band right there. Okay, so that way, you know, if the market reverses, you'll always make some money out of it. Alright, and you know, forget about the TP there right for the moment. Alright, what we will do is we'll trail step it. Okay, so once it hits, like say your first band here, you go ahead and move your stop loss value up to, say, maybe book five pips in or something like that, so at least you get your money back from the pip spread that the brokers are actually getting from you. Okay, so book at least something in, and as the market starts to climb, when it goes up to sort of like the upper band here, go ahead and book in half of the profits or something. Okay, and then keep on going up higher. Alright, now what you could alternatively possibly do as well, depending on what type of account that you're using, if you're using like a micro account, you can probably actually split one lot in half, and you can take away half of your profits and let the other profits ride, you know, so you'd be going on at 0.5 lots all the way up, and every time that you go up, say like 30, 40, 50 pips or something like that, depending on what the reward to risk ratio is. In this particular instance it was 57 pips. So when it goes up another 57 pips, move your stop loss up to book in 57 pips and bring it up higher, say maybe around about there, when the market price is up here somewhere. Okay, and then when the market moves up even more, go ahead and take off another half a lot or half of your open position. And then when the market moves up another 57.1 pips, go ahead and move your stop loss up higher. So now you would have booked in 100 pips. Okay, so you've already taken off one out of a half a lot at 0.5 lots, and then you take off another half a lot at 0.25 lots, and then you've got 0.25 lots riding from here up to there. And keep on doing it, and keep on doing it until you run out of lots to actually cut in half. Yeah? So that's one strategy. Alright, that's one way of going about it. So that's for a buy trade. Let's take a look at a sell trade opportunity. Alright, we've got a candle right here, a red candle. That does not qualify because the close actually comes below that lower band. Okay, here is a red candle. Now I personally don't like to really look for, you know, really low, small candles. I kind of like really dismiss those. I like to see ones with a little bit of a body in it at least. Okay, but you could possibly still go ahead for something like that, go in on the new bar and target like the lower of the band. However, when you take a look at this red bar right here, you want to immediately, okay, grab a hold of your crosshair tool out right here, which is right next door to your cursor black icon on your MT4 trading platform, and go ahead and see where this red candle bar actually appears within the accelerator oscillator. Okay, and you can see that it's actually on a green bar, so that's no good, that's a no trade. Okay, here is another one right here. It sits inside the two upper bands, it actually closes inside the two upper bands, and it also lines up with the red bar below the vertical scale. That's awesome, that's what we want. Okay, so then we go ahead and place our stop loss 1 pip above the high of the previous high, yeah, and then we go ahead and we go in short right here on this blue bar. Okay, so our stop loss is going to be 47.4 pips. Okay, and let's go ahead and see how far it is to that lower band. And we can see that lower band's 32. Okay, it's just a little bit under 1-to-1 ratio. But here's the thing, we're in an uptrend. Okay, so that's something else that you really need to consider. Do you really want to fight the trend, or do you want to be sensible and only go with the trend? I think you would rather go with the latter, right? You would rather be sensible regardless of how many times signals come up for a short trade in an upwards trend. Okay, you can see, look at this line, you can see it's going up, it's not coming down, right? Okay, so, you know, have that thought process in your mind and understand that it could possibly reverse and go back the other way. Okay, there are some candle formations in there if you're advanced enough to know about candle formations that shows that the sentiment is over. Okay, just maybe temporarily that the sentiment is over for going up, but you could go ahead and apply those kind of risk elements into your trading accordingly if you are comfortable with those. I'm not advising that you go ahead and put a short trade in an upwards trend. I'd rather go ahead and actually do a buy trade, something like this, where the market's starting to go back up. Okay, you can see that previously that the line is going up here despite this little down bit area. Okay. Alright, so there is a sell trade opportunity there, and you can see indeed it does hit our take profit target. Alright, let's take you back and give you one quick more example. Here is another sell trade opportunity. Now this one here, again, although I've just said, just previously, don't fight a sell trade opportunity in an upwards trend, but again, these kind of signals do come off very well, more often than not, but I'm not going to write that in concrete. Again, keep yourself diligent at all times, and I don't I'm not going to be reliable for any wins that you make from this strategy, and also conversely I'm not going to take any responsibility for any losses that you make. You are solely responsible for your own decisions. Okay, this is just merely an educational video, hoping that you can give you a little bit more insight on when and when not to actually open a trade. This particular trade signal right here happens below the signal, below the vertical scale for the awesome oscillator. That will be good in my books, and I'll go ahead and take that, plus I'll do some candlestick analysis to try and confirm whether that trend is over. And yes, I will go ahead and I'll actually go ahead and put in a sell trade opportunity here. Just because I may do it this way doesn't necessarily mean that you should do it that way. Your stop loss should actually be 1 pip above the high of the previous high, which is right there. We calculate the pip difference between there and our open price, which is 40 pips or so. And our first take profit target will be either the first lower band of the envelopes or the lower one of the envelopes. Either is fine, it's completely up to you. Let's say that we did it basically on this area right here on the lower blue part of the band. We calculate that difference right there, and we're looking at 48 pips, so it's just a little bit over 1-to-1. You'll also may notice that a lot of these trades will actually come in and break a profit in about an hour to 2 hours. Yeah, so give that a try, see how you get on. Okay, so thank you very much for watching, and I will see you very soon. Bye for now.